Hello, how do you do large cap stock swing trading daily analysis if you are using long option swing trading strategy? You open your watch list and we have our watch list of large cap stocks open, upward large cap stocks open, and we are going to analyze few stocks together. Again, it's good to analyze your stock after the market close in the evening or early in the morning before the market open. And today is Monday the 24th, February 24th, 2025. We are pretty much going to do the analysis before the market open. So that means it closed on Friday the 21st. So the first one we are going to analyze is MLM. As a swing trader, you can trade on daily chart. You can use either maximum daily chart or 1 year daily chart. With long up to long swing trading strategy, you may not see all your trend lines if they are lower than where the price is, or if the price is in touch base with it within that 1 year time frame. That 1 year daily chart will show you on the screen. Friday, the price drop. That's why you are seeing the red bar, or the price is colored in red. Just mean that at the end of the day, the price at the closing of the market was lower than the price in the morning. And the green bar means the price in the evening at the closing was higher than the price in the morning when the market's open. And you have the price on the y-axis and the date on the s-axis. So MLM, we bought it in 2024, and we have not sold it yet. We bought it shortly after it reached a new high, and shortly after that it pulled back and touched base with a trend line here and still continue to go down. We are going to go to maximum daily chart to actually see a better there. But for 52 weeks time frame, this is the lowest price and this is the highest price within that time frame. So we are going to go to maximum daily chart. So maximum daily chart, we can see that it does make a wide mountain before it touch base with this trend line, and this is one of the two trend lines that we like to buy at. It breached this one, so this will be the next one that it might be going to. And yeah, it reached that peak, and it's pulling back. But we bought it already, so it will be a while. We will wait on it a while until it goes up for us to sell it. So for the time being, it's going to be negative in our account. But yeah, and at this point, if you like to buy those, I don't think it's the time to buy, because it seems to be it's creating lower lows, so it could well be going to touch base with this trend line. So the next one is MMC. MMC, we purchased it this year, 2025, and we purchased it there. In fact, we traded in 2024 as well using short option and swing trading strategy, and it reached that new high when we sold it last, pulled back to this trend line and start going up, and we bought it, and it's been going up from there. So let's get closer to see what it's doing. But let's go to 1 year daily chart to have to see bigger bars. You can see short uptrend launch in trading strategy that we use and buy and sell a few days after. But with the long uptrend launching trading strategy, After we bought it there and sold it here, you see we bought it with the short optional insurance strategy. We bought it pulled back on us. It took a while, and we just wait, and it reached a high, and we sold it. And then it pulled back, breached this trend line, which is a long trend line as well, and continue, reach this one, linger there a little bit, bounce back off of it, and reach this bottom one. So creating lower lows, it reach it and start creating higher lows. So this red is higher than this red, like the bottom of it. And then we bought it at the first green bar that followed that pullback, and it start going up from there, pull back to even lower than where we pay for it, and start going up, pull back, went up, pull back, went up, pull back. So we bought it here. Now with the long optional insurance strategy, we have trend lines, long trend lines, and this is the lowest one that we trace and we targeted. So because we bought it when it reached this trend line and start going up, so pretty much we bought it at the valley. That is the mountain top. That is the valley. So when it start leaving the valley, we bought it. Therefore, we will want to wait for our exit point is going to be when it reach the next high. So now what we are going to do is go back to maximum daily chart and see when it reach the trend line that we bought it on, how it behaves. So I'm just pretty much showing you how the long optional insurance strategy that we are using, how it works. So you can see that when it touched base with it, it went up, it pulled back to this line, and this line could be a line that if we want, we can continue tracing it because it could rest on it. So it rests on it and then start making new high in fire. It didn't make a new high here because this peak was higher, but then when it left here, it started to make a new high and then pull back to it again. When I put my mouse here, the price is lower, and when I put my mouse here, it's a little bit higher, close. So now the question is, if you buy it here, you can wait to sell it. In fact, let's see, those are highs. So when you reach the first new high, you could sell it and then wait for that to pull back to this trend line. When it start going up from there, you buy at the first green bar that will leave there, and if reach a new high again, you sell and wait for that to come back to it and buy it. And I think if it's going to follow this pattern, we could combine long optional insurance strategy and short trend line insurance strategy if we want to accumulate those profits, because when it goes up and pull back, then you'll be losing this profit here. But keep in mind that you'll be buying, if you are buying it here, you'll be buying it at a higher price compared to where you bought it before. That's something you see when I put my mouse here, the price here compared to when I put my mouse here. So you might wonder, well, buying it here to avoid losing this profit, instead of just keeping the one you bought at the trend line and go with it, if that override each other. Don't know if that makes sense. Like paying a higher price here, after you sell it here, maybe that profit there, you are pretty much giving it back by buying it at a higher price. Does that make sense? So, and that's something to consider. Another thing to consider as well is because it's going to make multiple higher highs for a while, the first high that is going to reach, we may not even sell it, even if it's going to come back down, go back up, and so forth, because it's going to have multiple new highs before it will decide to come back to this trend line. Even so though, when you buy it here, it's like 154, and at this area is 205. Even if you don't get out on time, it comes back to this trend line, you'll still have a profit in it, because this area, it is higher than this area. So it's the nature of the type of stocks we are trading. They are upward, but we are just going to keep observing it and see how the long up-trend swing trading strategy is going to play out. It didn't really move far away from the trend lines like the way it did it here though. So we are just going to, to see. Chances are when it reach the first high, we may not get out of it. To see that will be a good bet. And I think we are going to continue ascending this line to see if it reached the new high, if it's going to pull back to rest on it. And alternatively, when it reached that new high, we could sell it and wait to get back in it on this line. Because if it fall back to this line here, it's going to be closer to the line we bought it at. So we could lock in some profit, and when it fall back to this gray line, we will buy again. So we have options with these stocks, so we are just going to continue observing it. But with this long up-to-line strategy, that's how we are thinking about it. That's how we are strategizing, comparing what it's doing to what it did in the past around that same level of the trend line, and then have some backup plan on how we will exit, or if we will stay in the trend in the trade longer. So the next one we'll analyze is MRVL. So MRVL, we have this trend line that we like to buy at, but right now is following this one. So it does make a very huge mountain, relatively wide and tall. So, and I think it could be doing the same. You see how tall the peak is compared to the valley. So we just prefer to wait on it, because when it reaches that peak, it takes a while to come back down to touch base with this line. So we don't know if it's ready to go down yet, or if it's going to continue making higher highs, but we are just going to wait on it and get in at this trend line. We might have to wait for a while, because previously it took a year time frame. This is 1 year, this is 1 year. It took a year time frame to come down. We don't know if it's going to take that long to come down, but yeah, we'll just, it took 2 years to get up there. We are just going to keep observing it. So the next one is Microsoft MSFT. So MSFT, we like to buy at this trend line, but right now it's going sideways, consolidating around this area. We bought it already somewhere after it reached the peak, and then it pulled back on us and has been around here. So we are going to go to 1 year, and Friday the price dropped as well, but it's far from where we bought it, so it has been negative in our account for a while. So let's take it to 1 year. You can see Friday the price drop, and you can see where we bought it, and when it pulled back down, This is the 52 weeks low, and it has been doing the zigzag around this area. So, but that's where we bought it. It will take a while for us to become profitable and sell it. So the next one we are going to analyze is MSI, and that'll be the last one for today's analysis. MSI, we bought it as well somewhere up there, and then it pulled back on us. So we have two trend lines that if we are going to buy it again, it's going to be on those trend lines. And right now is breaching this one and continue to go down. So we don't know if it's going to turn around there or if it's going to come down to this. But Friday, the price went down as well. If we go to, and it does have that pattern. Do you see it? See how gradually it went up and then fell down? And I think it repeated that pattern here, but just higher up though. But it did repeat that pattern here, so it could be well coming back down to here. So we got stuck in here for a while. It will take a while for that to touch base with here and went back up for us to be profitable and sell it because we bought it somewhere here. But yeah, so this concludes how you analyze your upward stocks using long uptrend line swing trading strategy. You trace your trend lines, long trend lines meaning longer than 1 year time frame, that connected to lows, obvious lows, higher lows of the chart, and you pick some that you feel comfortable buying the some share on or buy the stock on when it touch base, when the price touch base with that trend line and start going up from there. And you just every day you analyze the chart to compare where the price is, how it did that day, to where your trend line is, your support line or your uptrend line is. And when it touch base with a price pull back to it and start going up, you pay attention to what is going on there. And once you are looking to see if it's down, going down, so you are looking for the lower lows to stop and higher lows to start forming. Give you, when you have about two of them, then you know that the price is down, going down and start going up. And you can choose a green bar, the first or the second green bar after a pullback, to buy some share. And once you buy the share, you can start, now when you analyze the chart, you see where the price is to where you like to exit, which could be the next high, or 5% return or 10% return, depending on how the chart behaves. They all behave differently. So you can just wait. If you buy a well at the valley, you can wait to when it reach the peak, the first peak, that the new high, you can decide to get out of it as well. With this one, for instance, this trend line is away from the next high. Therefore, if you buy it at the trend line, you'll be in the trade for a while, accumulating profits until it reach the new high. That means it will be higher than this for you. Once you see that new high, you sell it to get out of the trade, and you wait again for that to come down to the trend line for you to buy again. That is the long uptrend line swing trading strategy. But depending on the pattern, you might have to combine long uptrend line swing trading strategy and short uptrend line swing trading strategy. If just like the way the previous one that we analyzed that was falling back to a lower trend line that was higher than where we bought it from, and go up and fall back on it gradually. If you want to sell it and get back in when it fall back to that midpoint, that would be combining long option trading strategy and short one as well. But yeah, you just have to see which one, if combine them is something you wanted to do, or just keep the long option launching trend strategy and get out at the first new high. Or again, you'll have to compare. Once you buy, you'll have to compare how it behaved last time it touched base with that trend line, how it behaved. Like this one, for instance, there are multiple. It reached a new high here, a new high, and touch base. So touching base with it, it touched base with it again, but then reach a new high here, fall back a little bit, touch it, and reach a new high. So a new high, you can get out and you pull back to a place here and pull back to here, and you buy it again, and then you have a new high. And it chose a this upside of the mountain wall to rest on as it's going up. But buying it at the trend line, you could actually stay in even if it reached a new high and pull back. Clearly it reached a new high multiple times, so you could stay in it for a while. You know that once it comes down and start going up, it's going to take a while before it's done reaching the peak of the mountain and pull back. Therefore, you could stay in the trade for multiple highs before you decide to get out of it. But again, we will get there. We will decide when we get there. In the meantime though, we bought it and we got stuck at the top, so we'll have to wait for a while for that to touch the valley and go back to the top for us to sell it. So thank you so much for your time. Just as small, one share at a time if you are a beginner, or $100 per trade or $300 per trade, and just don't aim for unrealistic profits. That way you can sell it fast and get back in it again to practice the strategy you are using. And and as you are saving money to add more to your account, to buy more and more share as you get comfortable with the the strategy you are using, and at the same time you'll know what stocks is your strategy works well for. That way you pretty much like shake your watch list. You create your watch list, and then you pretty much like sift it through as you notice the stocks that are behaving well with the strategy you are using, and the one that do not really align with the strategy you are using. That way at the end of the year you can take those out, the one that didn't really work well for you, and add news in. But have a stock watch list of stocks you can analyze within an hour every day. Even if you are not buying stocks, you can analyze them. This month, February, I didn't buy stocks March. Up to now, I think I purchased stocks once. But every day we are trying to analyze the stocks on our watch list. That way we can, if one is well set, we can decide it to buy. But and then by analyzing them every day, you get yourself familiarized with them as well. At least that is the goal. Thank you. We thank you very much for watching our videos. We thank you very much for your time. We thank you very much for all your comments. And we thank you very much all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in our sub.com, our blog. On our channel and on our blog, we share different ways you can save money and different ways you can make money to reach your financial independence, where you do not depend on an employer to provide for your family. It's good to have a job. You work hard at your job, and you save some of your hard-earned money to trade with, to swing trade with, to invest in the stock market, or swing trade with, to put that money to work. And swing trading is one way to make money. Just that small, to learn the process, to get comfortable with it, to customize your strategy to fit your personality type, your risk tolerance, and to have it in a way that can help you reach your financial goal. And little by little, you'll add more money to your account, to as you are accumulating profits, your account will grow, and as you are adding more money, your account will grow as well, and you can buy more share of a stock each time you swing trade to increase your profit. It's all about mastering the strategy. And as a beginner, you can start with large cap stocks, as they are now, they don't fluctuate too quickly. That means you are not going to make a huge profit very quickly either, but they are stable enough that you can practice the strategy you are using with them. That way you can focus your energy more on the strategy rather than trying to keep up with the fluctuation of the stocks you are trading. And once you master the strategy, you can see if mid cap or small cap, you can find some good one upward there as well that you can swing trade to add to your watch list. But again, this strategy, upward swing trading strategy, work well with upward stocks. Therefore, our watch list is a watch list of upward large cap stocks. Thank you. And once you start making $1 a profit, when you invest $100, you know that when you invest $1,000, you will make $10 profit. And that particular stock is just scaling it from there. But you just want to be able to master the strategy and start making profits with it. And with the upward stocks, when you buy and the price goes down on you, by having a good stocks in your portfolio, you know that it's okay to just leave it in your account until it comes back up for you to be profitable before you sell it. You don't need to sell it to lock in your losses, but you can just leave your money there and just learn from it and do it better. After you sell it, you know what you need to do differently. But that's why we still have some stocks we purchased in 2024, like this one and Microsoft, for instance, and they are still in our portfolio negative, but we are not selling them to lock in those losses. They are unrealized losses, and they'll just be in account. We all know Microsoft is not going anywhere anytime soon. Keep in mind that stock can bankrupt, can file bankruptcy. And one filed bankruptcy on us last year, but that's why you want to curate your handpick your watch list of stocks that you like to trade. There should be stocks that you can invest in long term that you will choose to swing trade short term. And if you get stuck in it, it pull back down, you just wait for them to go back up for you to sell it at a profit. So thank you so much for your time.